Yeah, go and get your 1 free Apple share, and if you want to refer your friends, get your 20 free Twitter shares. Not too bad lah. Is Twitter moving up? I think Twitter is moving up, right? Oh no, wait, recently there was a little bit of discount. We can talk about Twitter another day, but by the way, Thomas is here in the house from steadycompounding.com. Thanks for joining us today, Thomas.
Pleasure to be here.
Whoa, nice. So what is your take on the market now? Okay, so how we always do this is we'll get our guests to talk a little bit about their take on the market. What do they see currently? What is going on, in their view? And then after that, share about your ideology. Like, what is your investment ideology? What are your core beliefs? And then we talk about the 3 ideas that you brought for our community today. Okay, so we start with market outlook. You don't need to comment about every single thing. Just share with us what you're looking at and what is of concern in your peripheral.
I think there's a lot of talk on the street about inflation fears. But when it comes to thinking, the way I think about inflation is this, and it's really based on what Warren Buffett actually mentioned in his 2004 annual general meeting, because there was a shareholder who was particularly concerned about inflation, and this was what he said. Like, imagine if you are a super surgeon and there's someone who is very sick. If you are the only one in town who can cure this disease, no matter what currency you are going to charge, people are going to pay, in that currency, be it the US dollar. If US dollar, it becomes worthless, then you are going to charge in seashells, or in today, more popular people talk about cryptocurrencies, right? If you want Bitcoin, people are going to pay you Bitcoin, if you have that. So what I try to do is I try and focus on things that I can control, which is really to look for excellent companies, companies that are able to keep reinvesting their retained earnings at very high clip for a very long period of time. And when it comes to inflation, not all companies will be impacted the same. There will be some companies who will do better, and there will be some companies who will do worse. And what I try to do is I try and look for companies who don't require a lot of capital to grow. Like, for example, when you look at Facebook or Google, for every new advertisement they sell, what is the incremental cost that is required? There is not much cost. To be honest, I don't think there's even any single incremental cost for earning an additional dollar of ad revenue. But when you look at construction companies, for example, they have to buy inventory. Money will be locked up in working capital. They have to buy machineries. And when inflation comes, they will have to spend an increasing amount of money to cover the cost of all these raw materials. And whether or not they are able to pass on this cost increase to their consumers is another thing, because a lot of times when consumers look at construction projects, or even when you look at how the government bid for construction projects, it's the lowest bidder. It more often than not, it goes to the lowest bidder. So there's not much chance for companies in this field to be able to pass on the price increases. So I try to look for companies that don't need to spend a lot to deal with increase in sales, and yet they are still able to pass on price increases to their customers without too much concern or losing market share. Yeah.
So is it like most of your picks are going to be tech related? Because I guess technology kind of companies will have that kind of scale. Not in these 3, but basically in your portfolio also, right?
Yeah, so my portfolio is typically divided into 2 parts. One is the classic really very steady companies who are quite large, like for example, when you think of companies like Disney or Starbucks, they are able to pass on price increases to consumers very easily. They are not exactly the most capital light, but when it comes to passing off price increases, like let's say, imagine you are an American, right? COVID-19 just ended. Your daughter come to you, say, I want to go Disneyland. And Disneyland increase their price steadily. Even for their hotels, they are the only hotel that can raise prices 5 to 10% every single year. But the moment your children say no, or you are just gonna have a really tough time saying no, to your daughter, saying I want to go, bring me there. So this is the type of companies I'm looking at. Or when you look at companies like LVMH or Hermes, people, this is not discussed enough, but their competitive advantage is that they keep raising prices every single year. So, not all tech companies, but there are some who are able to raise prices, pass on all this to consumers. Apple, sorry, did you say Apple?
Yeah, I say Apple.
Apple is one of them. Yeah, I guess people like...
You can play pay for your display stand, pay for your earbuds, and then like sooner or
Yeah,
later you got to pay for the screen also. I don't know.
the whole
But I think
ecosystem, right?
exactly. But I think Apple is changing its strategy. It's not going for super premium anymore. It's building the ecosystem and then
Yeah,
selling you services and all the extra stuff coming along, right? So they got all
yeah,
the like cheaper tier. In the past, they don't sell second tier phones, right? It's only one tier, but now they got multiple product line, right? So, but that's not the discussion today, right? We can keep Apple for another day. So a lot of
right,
things to discuss. Okay. So then that forms your main core portfolio in terms of these kind of companies, and then the other bulk is your tech companies, right? But then can you give us a little bit more color, like what kind of tech companies? Because tech companies is like they always make the media circuit, always become very hyped, but
right.
like what do you actually look out for in them? Yes, book can answer everything, right? So
Yes, I mean, so when you look at a lot of these tech companies, I mean, Facebook, all this is super profitable. Margins of like operating margins of over 40%. Then we have the other segment that is loss making. But there's a good reason why they are loss making. And it's largely because they have very attractive unit economics. It's like, let's say I have to put in $10 to acquire a customer today, but they have a lifetime value of $100, then it makes sense for me to really ramp the pedal and spend a lot on marketing, spend a lot on promoting, locking in these customers today, and that is exactly what they are doing. Because now COVID period, it is the best time to start getting a lot of companies on cloud on your digital services. So it is kind of like a wasted opportunity if a company doesn't really ram the pedal, on marketing their products today. So I do own SaaS company, also e-commerce. SaaS companies like Twilio is a communication platform as a service. I do own CrowdStrike or even C Limited, which is in e-commerce, because these companies are really growing super super fast, and management are ambitious. So one thing I look up for in management, especially apart from integrity, is really being ambitious, because that is something you cannot teach a person, and you really have to look up for it in the shareholder letters, the interviews, and also their action, because all talk, but you have to look at, when they say they want to do certain things, are they really that competitive, and are they really eating into a lot of this market share? Yeah, so that is something I look for when it comes to investing in companies. And when it comes to tech companies, so a lot of them loss making. You need to have a rough idea of what their mode is, because a lot of their valuation is tied up in future value. Not the value today. They're not making money today. It's a lot of banking on their future value, and you want to make sure that this growth trajectory is going to last for a really really long time. It's inevitable that their valuation multiple will contract. Like for Twilio, later we are going to talk about it. No companies will be able to trade at price to sales of more than 30 times for a very prolonged period. Sooner or later, it will come back down to 10 or below. When you look at companies like Salesforce, for example, the oldest of SaaS companies, they are often trading between 10 to 15 times price to sales. So that is where we can expect a lot of these SaaS company to eventually contract their multiple. So where the money comes from is really going to be coming from how fast they are able to grow their revenue. And when the operating leverage kicks in, that's where they become hyper profitable. When we look at companies like Zoom or CrowdStrike, because of how fast they were growing, they're actually free cash flow positive already. I think Zoom free cash flow margin of 40%, and CrowdStrike, the latest quarter, I think their free cash flow margin was over 33%. This is really very really superb margins. It's hard to find companies that's able to throw out margins like this and still growing that rapidly.
Interesting. Can you share with us a little bit when you say like growth trajectory? You want to see a company that has a very long growth trajectory, right? Like what is the kind of growth trajectory are we looking at? What is there like some sort of matrices that we look at, or what is it like? Because different companies are addressing very different markets, right? Like Zendesk is also a company that I think it's pretty interesting, but they are not like fast growing. They're like 20% growth, but they're pretty consistent. They are cornering a very interesting market, But then, so how do you then look out for a company in the SaaS space to say that, yeah, this is considered a good growth trajectory?
Yeah, I think the quickest way is to look at the total addressable market, and you see what percentage of their revenue is is of the total addressable market. So when you look at companies like Twilio or CrowdStrike, their total addressable market is multiple times of what they are able to make today. And for them to eat into this total addressable market, which is the total market size, right? You want them to become a major player. At the end, you want to look at whether they have that edge. They have what it takes, not just from a product standpoint. Like for example, when you look at companies like Fastly, great product, one of the fastest CDN, and the compute edge is really well designed, but their sales is not meeting up to expectations, and you see the share price really taking a hit. And their problem is not with product; it's really with their sales team. And recently they hired a chief revenue officer when it comes to really boosting up the sales. So you want to see not just a great product, but they are also able to sell this product. So this is what I mean when are we able to see that growth sustained for a very long period?
Yeah, definitely. I think especially in the tech space, right? Because in the tech space, there's always a lot of discussion, but not unique to tech space. But in the tech space, it's always about product. There's a lot of talk about product, right? And you want to see like very good CTO, highly, amazing engineers and all those kind of things. But a lot of people forget that when you're investing in a company, it's not just the product. There's the whole business behind it, all the processes, right? So your ops, your HR, and your sales guys are very, very important. So I think those are definitely some points to note for our listeners. Yes, by the way, shout out, someone say that we should make this into a podcast, right? So then our listeners can continue to listen. Yes, I get it, all our audio listeners, right? So we will look into this, right? we'll cut up some good pointers so that we can do all that. So yeah, thanks for sharing with us, like what you think of inflation. I think inflation is definitely a discussion worth having continuously, but definitely getting good fundamental companies, and in your portfolio there's a lot of tech, like, as what you've pointed out, right? So then we're gonna go into this main discussion of the tech guys, so that it's that and one of the big boys inevitably Facebook lah. Some of you guys are watching on Facebook at this moment in time, right? And Facebook has so many products, it's so hard to just kind of talk about all of them. But could you kind of put us the base case of Facebook? It's not a small company anymore. It's not the next big thing. It's already a big thing, so why do you think it's a good idea at this moment in time?
Yeah, I mean, the reason why I brought up Facebook is because when it comes to a risk reward basis, I think Facebook offers one of the most attractive ratios. Not just because it's huge, but its moat is incredibly big when it comes to network effects. The more people you have on the platform, the stronger the platform becomes. And there's always a lot of bear theses around Facebook. I mean, back from their Cambridge Analytica time, many people say Facebook is evil, from to school shooting, some of them, they broadcast it on Facebook. And then more recently, there's the Apple iOS concern. This company is continuously undervalued when it comes to the traditional metrics. Like for a company that's growing at over 40%, trading at forward PE of almost 20 times after you back out the cash, it's quite ridiculous. I mean, even for Starbucks today is trading at 30 times PE. A lot of other companies are trading at larger valuation than Facebook, even though Facebook is growing much faster, 40% even though at this size. Operating margins have increased back to over 40%. And last year we see them really spending a lot of money reinvesting back into the platform to make the platform a lot more secure and a lot safer. You don't really see a lot of extremist content compared to a few years back. That's really a result of them hiring a lot of security officers, really looking through the videos and investing into their AI to pick up this video even before they are published live. And we saw operating leverage really kicking back into this company. I think their operating profits rose by about 100% for this quarter alone. And Mark Zuckerberg is super young. Like if you talk about a more accomplished CEO, it's hard to find one. The media always downplay what Facebook is achieving, but at 22 years old, he rejected 1 billion from Yahoo. Because this shows his commitment into this platform. And the way he grow Facebook is quite incredible. Getting Instagram at 1 billion, WhatsApp not making money yet, but a lot of optionality. And he's really focusing onto the next platform, which is the AR/VR platform. because he says that's where the transition from mobile phone to the next platform, his vision is that it's going to be AR and VR. So that's where he's investing a lot of money in. And also from the latest earning call, he's doubling down on the content creator economy, which is a lot of what we see today, like Substack, for example. And that's where he's really putting a lot of effort. And at today's valuation, I think there's a lot of optionalities that's not discounted in. And I don't think Facebook is as fragile as what a lot of people say. Like they said, it's the MySpace, Friendster. But when you look at their size, Facebook has over 1.8 billion, just Facebook, not Instagram, 1.8 billion plus people using it every single day. The amount of engagement on the platform, it's quite insane compared to what MySpace and Friendster used to do. And Facebook vision has always been to become the number one communications platform to connect people together. And that is what they are doing. And they're doing quite a great job. Last year, we saw like a lot of companies are boycotting Facebook. I think like Ben and Jerry or some quite a lot of them. So that was the headline last year. But what a lot of people don't realize is that Facebook customers is super diversified. They have no customer concentration risk at all. Like even if you were to take out 100 of that companies who was boycotting Facebook, I think it accounts for less than 2% of their revenue. And that was why Facebook had a big hit last year. So I constantly find a lot of good entry points for Facebook. Even until today, the valuation is not demanding. And Zuck, I think he's 30 over years old, not even 40 yet. Super long runway for this guy. Yeah, and listening from his earnings call, he still has a lot of drive here. He's not in retirement mode. Like you see, like Jeff Bezos, all this, you can sort of tell like they're in retirement mode already. You know, they just want to focus on the fun part of the work. They're not going to like really do all the dirty stuff anymore. But Zuck is still really driven. Very ambitious when it comes to what he wants to achieve for Facebook.
Yeah, fair. But I think a lot of people don't discuss much about the business side of Facebook. Like, you know, everybody
Right.
talk about the network effect, the front end, the user interface, a lot of
Right.
people on this platform, blah blah blah. And then you compare it to MySpace, you compare it to Friendster. I think I think I was from the tail end of Friendster. I grew up last few years before Friendster disappeared.
Yeah.
Okay, so I was definitely not in MySpace. Last few years of Friendster. But my imagination tells me that probably their ad ecosystem that these two platforms have built is not as sophisticated as what Facebook has today. Right? It's like a lot of news platforms, they still need you to go through the whole long process. Okay, I'm not saying SPH, but you need to go through the whole long process before you get your ads on, the whole B2B structure. You got to talk to your representative and everything. But hey, Facebook, we can, after this, we could already load it up and press ads and it can go already, it runs, right? So the kind of infrastructure at the back, you know, I think it's not well discussed by a lot of people.
I think you're exactly right. Like when you look at the ROI on ad, it's just super high compared to other platforms. It's way higher than Twitter for sure, and higher than Pinterest and all the other companies because of how targeted they can get. And it's, as you said, it's so easy, and the data is so easy to understand as well. Like the amount of help that when it comes to understanding which of your marketing campaign work, which doesn't, these are super helpful for companies when it comes to see like understanding their consumers, and they adjust accordingly.
Yeah, I think for marketers also, you don't go in very blind. Let's say for Google keywords, you start randomly bidding on keywords and all that. But if you have no idea whether people are going to click or not. But Facebook, they have this kind of profiling, right, which is so accurate, and it's very, very useful, especially for smaller companies that are just starting out to market their product or service.
Right.
I think one thing when I look at the ad is still running, this ad is profitable. So it will keep running until no more juice, until this angle totally gets squeezed out. So that is the reality today, right? In the digital advertising space, and Facebook is definitely a dominant player. But I'm curious, like, are you concerned that predominant of their revenue is coming from ads? Because like you point out, like Twitter, Pinterest, even Snap, a lot of these other platforms, they are I would say I won't say they're chipping off the network of Facebook, but they're
Right.
getting a lot of the younger network, or they're taking the future network, or even they are cordoning their own small little corner in the advertising space or in the network space. Right. So are you concerned about, that all their revenue is in ads, and there are all these other platforms that are springing up and they're getting traction? They're not like small things on the side. They are getting very serious, from Reddit to Substack and all these other guys, right? So are you concerned about that?
Right. So there's always going to be a competition, but thankfully, Mark Zuckerberg is not one to rest on his laurels. And the good thing is, when it comes to the platform, let's say if it were to decline one day, it's not going to be like a sudden thing. It's going to be a gradual thing, because I think consumer habits are still hard to change. Like, I think people of our age group still like to use Facebook and Instagram lah. I mean, it's hard to foresee us going onto TikTok, or being super active on
I
TikTok.
know. I always got all these
Yeah.
random thoughts and I'll put on Facebook, right? I will not go on TikTok and start dancing and telling people my random thoughts. It's like,
It's
3
just
days
a different
later.
way of expressing ourselves. Very different way of
Yes.
expressing ourselves.
Mm,
So
mm,
they,
mm.
they are able to occupy some niche. But I do think that the industry, because it's so big when it comes to digital advertisement, I think there's room for multiple players. And it's tough to see who will be the really the ultimate winner in the future. It's probably going to be a few players. Pinterest has been doing quite well. Snap has been doing quite well. Twitter still not so much.
Jack
I think
Dorsey
Twitter
needs to
is
focus. Jack Dorsey needs to focus. Stop disturbing
he's
every
like
other thing.
a part-time CEO, that Jack Dorsey.
Yeah. That
Square is doing
irritating guy.
super well.
Yeah. But yes.
But I think there's room for multiple players, and the biggest loser, I would say, for sure, is going to be traditional media when it comes to TV and newspaper, etc. Like the company you mentioned earlier, lah.
Yeah. I'm Brutch.
Yeah.
Oh yeah, I realized that we forget to say. By the way, this is not for recommendation. We're only for education and
Yes.
entertainment purposes only. We say until so long already. So
Yeah.
we need to put this out there. Don't take this blindly. So yeah, but and okay, so I think that's the part, right? And I think Facebook is trying to monetize its other platforms other than Facebook and Instagram, which are like similar business models, just different
Right.
interface, right? They're trying to monetize WhatsApp.
Right,
But
exactly.
I'm not seeing much coming from there. Like keep saying payment. They tried pilot in India. They try to do different things, and then there's the Messenger, which is, like sometimes I don't know to talk to my friend on Messenger or WhatsApp. But the idea is they have
Right.
this very big chat function within their ecosystem that I'm not seeing real monetization from. Right? Do you have any thoughts on that?
Yeah, that is one aspect that I'm a bit disappointed with. But when it comes to the valuations, I'm not accounting for that part of WhatsApp, even being able to monetize. I'm really just looking at their advertising business. That's how cheap they have been, when I was buying into Facebook. But he definitely should have done a lot more. Like WeChat is able to roll out innovations so rapidly. And I think there's a big market in India, because India is really the underbanked region of Asia, and that is really how WeChat and Alipay really came to dominate when it comes to China, because a lot of their people are underbanked, and when you need digital payment, you need a platform. Based on what I've listened to their earnings call, when it comes to WhatsApp payment in India, and I also think in Brazil as well, the take-up rate is quite good for now, but they could have gone way faster. You look at how C Limited is executing in Indonesia, it's so fast. I think within 1 year of launching C Money, they've become the top when it comes to e-wallet in Indonesia, really. So with the kind of deep pockets Facebook have, he should have gone a lot faster. But I think a lot of his attention when it comes to Mark Zuckerberg is really spent on the AR and VR platform. Because imagine if that's going to be the next way of engagement for people, like the mobile phone. Imagine that to be Oculus to be the next so-called iPhone. That's going to be a huge market. But of course, when you look at valuations wise today, it's not really accounting all these are just regarded as side optionalities for Facebook.
So what do you think about Facebook's investment in the India companies? So like I think they did an investment in Reliance, They also do
we
payments, right?
Reliance Joe, I think. Yeah,
Mm.
so that is I think a really good move, because like if you when you want to do business in India, it's not exactly easy. So Reliance Joe has a really big presence in India already, so it's sort of shortcut their efforts when it comes to penetrating into India space. But there remains a lot to be done. Yeah, I really think they should move way faster in India, because it's just
Mhm.
such a under penetrated market. So much room to grow there.
Yeah, and exactly like what you say about C Limited, right? They use Shopee, they use Garena, and then they just double down the whole
So
channel.
fast.
So crazy, right? And
Yeah.
why is Facebook not doing a lot of those things? I remember there was a period of time Facebook was pushing the whole business solution, the whole suite, trying to
Right.
challenge Shopify and challenge all these other, essentially routing away from a need for a website. Just work
Right.
through Facebook, right? Do everything through Facebook, but that's also a little bit wonky. I'm not seeing as much focus, on that today. But you're saying that they're spending a lot of focus on AR and VR, right? So what is that part that they're focusing on? Why should we look at it? Why is that important?
So he says
Because
like
because Oculus have been around for a long, 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 long time. They bought it for
yeah,
a very long time. It's always been this side thing on the side. Nobody talks about it until recently, right? So
yeah, and it's only until recently that sales started to really explode. Like it was sold out, and it was very hard to get the Oculus in UK and in US as well. So back then, when it comes to AR, VR, you have to put on the goggles, and the goggles is wired and all that kind of thing. So it's not really that ideal yet. People are not going to wear it out, or is the experience is not as good. But I think this is the first time it has gone truly wireless. Like when you put on the goggle, without the wire, the experience is going to be much better. But he really envisioned moving the technology to a much smaller unit. It's like, last time when we have the phone, 大哥大, it's not exactly very convenient, right? It's really until it becomes
this
touchscreen,
size
it
one,
starts.
this size one, yes.
Exactly. It's not really that convenient or that ideal to use that technology. It hasn't really taken off. But when we start seeing iPhone come out, and a lot of these functions are inbuilt into the phone, that's where we really start to see a lot of people start using it. And his vision is that in the future, when people hang out and all that, right now on Facebook, etc., it is still not as ideal. When you are able to use Oculus, he envision like you to be really next to your friends, that level of engagement. If you want to try on clothes, when it comes to e-commerce, you are able to see yourself wearing that piece of cloth in the goggles even before you buy it. So that's where he really envisioned Oculus to really go.
Yeah,
We'll
but are
never
you
leave our rooms then. Yeah.
Yeah,
Ready Player One? That's the future. Metaverse, all these things are coming. Okay, but are you concerned
exactly.
about? Yeah, but are you concerned about Facebook going to hardware? Essentially, right from the very beginning when we talk about it, right? You were talking
Mhm.
about like margins very thick, asset extremely light businesses. You like these kind of things, right? But going into Oculus, doubling down on Portal, Oculus, all this kind of thing, right, essentially requires them to manage a hardware supply chain, right? So
Right.
then they gotta move products around, they gotta do all those things. So then, are you concerned about that as a business? Because then that is not very asset light already,
That is a really good question. So when we look at companies like Google, for example, you see them, or even Amazon, you see them trying to push out this hardware like Alexa or Google Home. They are trying to make their Google phone a success also, but it's failed. Like, or Amazon, they try to push out a phone
They
also, but
shouldn't
it
have
failed.
bought Motorola. The day they
Yeah,
bought Motorola was the day they died because they got framed into Motorola. But anyway, okay,
exactly.
yeah. Continue,
Yeah.
yes.
And then when you look at Google, they developed a lot of software, or like for example, you look at Google Chrome. It is not a revenue making unit, but I think a lot of us would know that Google pay a lot of money to Apple to make Google search the default function, right? Like in the billions. I think the last time they reported it was like 6 or 7 billion, 5 billion
Around there,
exactly.
yeah.
Huge amount of money. But when they develop stuff like Google Chrome or the Android, they are not really after making money when it comes to buying the Android software or spending so much money on developing Google Chrome, making sure it's the best browser. But it's really to harvest data. And when you own the Oculus, if you envision it to be the next OS when it comes to being in the AR or VR, that's where the most data points can be harvested, and you do not have to be at the mercy of Apple iOS updates. Because increasingly, if companies talk about privacy and all that, the edge of a targeted advertisement company is going to come from how much data they have. And this is why he's spending a lot of effort on building the next platform. Simply because by building that, even if the hardware business is not exactly a super ideal business, but it is where the advertising revenue is going to get a big boost from.
Do you know
Would
any
you-
other large tech companies that are building something like Oculus Rift? Say like Microsoft.
There are multiple smaller players, but the market leader is Oculus. None of them got the technology that's even close to Oculus for now.
By the way, just want to shout out for everyone, while we are talking, you have comments, you have questions, anything, just put in the comment section. We can pull it out. We can answer straight away. Okay. So that's the fun part. Don't just watch. Okay. We can have a dialogue. But yeah, so I think that's the part where you were talking about, relative to hardware as a business, right? So why don't they, do you think they should go for licensing instead? Rather than building their own supply chain, let's just set up this OS, build this thing, and then we license out the technology, everybody API into this thing. Would that be a better model?
If they sell the operating system like what Android or like what Google is doing for Android, that would be definitely more ideal. But because now it's just starting out, just like when Apple first built the iPhone, the company did need to sink a lot of money, a lot of investment into this product for now. It's definitely more ideal if they are able to adopt the more capital-light approach, like what Google is doing. But there's always the problem, like Samsung, you can see Samsung starting to push back on the Android. I don't want to give you so many data. I don't want to make your apps, the default on the homepage. I want to make my own apps, like, Google Pay and Samsung Pay. And Samsung Pay is seeing more success now because they make all the Samsung phones the default for Samsung Pay rather than Google Pay. So there's also that trade-off that we see. But I think Facebook, even if they were to manufacture their own hardware, I think the advertising business will be so profitable that it will more than make up for what even though it's not as ideal, but I think it will still be a profitable segment when it comes to producing the Oculus.
Fair. Maybe Facebook's ad business will be the AWS of Amazon, right? And then they can just keep churn and do all these kind of interesting things. So yeah, so I think we talk sufficiently about Facebook. If you guys got any question for Facebook, just drop it in the comment section. I know Facebook is like very positive and all, right? Do you want to just kind of sum it up for us a little bit? What are some concerns that you have when it's about Facebook? We cannot just everything positive. Yeah, must kind of be strategic about that.
I think it's really the regulatory concerns, because whenever the government, they want to whack somebody in the industry, they're going after the biggest one. And it's definitely going to be Google and Facebook when it comes to the advertising industry. Like when you look at who to blame for obesity, they'll blame McDonald's. So Facebook is, you constantly will have to deal with these regulatory challenges. But then again, I don't think America want to crush their own crown jewels. They are really the super tech companies of their own country. And if you were to crush their own super tech companies, then I think it's just a foolish thing to do. But of course, we have to look out for competition as well. TikTok growing super fast. Not sure if they will start to convert all the people of our generation and above onto TikTok platform. That's always a question mark. But we are able to see and observe the trend. It will not be overnight.
Let's all
maybe
do
when
this.
I see financial coconut on TikTok, then I'll start to sell Facebook.
Oh, we did have a discussion with the team at TikTok. So you never know, huh? You never know. We may end up on TikTok, okay? But yes. Great stuff. I totally get that. It's a dynamic market. It's not fixed per se, but the power of network, right? That's the modes that they have. A lot of people on Facebook. It's very hard for you to switch out. You go to TikTok, you got no friends, you got to remake a whole bunch of people. But yeah, we never know what's gonna happen. But I think summing up the whole Facebook discussion, they have a very big ad business. They are not like a Friendster, not like a MySpace. They have a very strong ad ecosystem that they've built. Easy for people to just kind of latch on, and it's not just about the front interface. Some people will say, "Aya, Facebook the lao nang there already," but actually, guys, if you didn't know, right, Huang Jing Nianhua makes a lot of money for MediaCorp. Just saying, right? The 3 p.m. slot is actually very profitable for advertisers. So that one we can talk about it another day. Okay, so the older people actually are prime for advertising. A lot of advertisements, a lot of advertisers care about the people at 35 to 45. And who are these people? Where are they at? Facebook. Facebook has this very big bar of 35 to 45, which are like millennials and pre-millennial. I don't know what you call them, but essentially that's the big part of the business. And I think what Thomas said is potentially we can kind of go into all these other growth potentials where Facebook maybe can be a lot bigger doing other things and continue to dominate in the space, right? So yeah, we're gonna come back again, with two other companies, Twilio and Alibaba. Okay, so but in this juncture, I'm gonna take some drinks. You can take some water. Bring out your drinks, and our advertiser has something to tell you. Okay, so we're gonna show an ad now. Woo!
Munger offers commission-free trading of stocks, options, and ETFs anytime, anywhere. Enjoy real-time quotes, free level 2 data for better investing decisions, and latest news in social community. Munger, your one-stop trading platform. Enjoy our promotions now.
Okay, we are back. So done with Facebook. Let's move on to the other two companies. Okay, second company is also has been making the media circuit for a while, and they are Twilio, right? Exactly what do they do? Do you want to kind of run us through quickly, Thomas?
Yeah, so they are communications as a platform, as a service, communication platform as a service company. So the best way to understand what they do is like, for example, when you book an Airbnb, or back when Uber was in Singapore, Uber used to be a big client of theirs. So when you receive the SMS saying that your driver is nearby, or you have to call your driver without revealing your number, so it's Twilio you're going to be using. Or when you order from Domino's pizza is arriving, and you receive a text message, that's all going to be Twilio. Even I think Foodpanda is using Twilio as well when it comes to informing you. So what Twilio aims to do is to be really help companies, enable companies to communicate with their customer whichever way they prefer. It could be through SMS, it could be through video. We see video chats very popular with a lot of the telehealth companies when it comes to diagnosing their patients and all that. You want to inbuild all this onto your own platform. We see a lot there using Twilio. It could be WhatsApp chat, it could be Facebook Messenger, really whichever way you wish to connect with your customers. Twilio will do that for you by just inserting a line of code onto your platform. The problem with doing things in the past is that telecommunications and government regulations is a very tough nut to crack. When a company, for example Nike, wants to reach their customers, let's say in another country, it's going to be very tough for them to reach their customers easily because of the telco regulations, and integrating them onto their software system is going to take like months to years or even more than a year to do so. But with Twilio, just within 1 or 2 days, everything is going to be up. You want to build a contact center. I previously worked in a company whereby we had to build a contact center for a company from scratch. We worked with Cisco, which is a super legacy provider. It took more than a year and there were so many bugs. But with Twilio, 2 days settled. It's just because it's on the cloud, you can scale super rapidly. And Twilio operates on a usage basis, and they target developers specifically. Meaning nowadays when it comes to making all the technological decisions, a lot of them the decision is made by developers. So that is where Twilio really aims their effort towards, by creating a lot of hackathons, and events whereby they invite developers, celebrate them, like really they treat developers like celebrity. So they are really the mind of share when it comes to the developers. And because they are on a pay-per-use basis, for as little as $5, you can figure out whether Twilio suits your product or not. You can play around just by plugging in a code, super simple, and off you go. If it works, then that's where you start to scale. Every SMS is only a few cents, like I think 0.02 cents or something. So $5, you test the product, you build something, it works. great.
think-
If it doesn't, then the Twilio team will start to approach you and, is there something we can do to help
how
you?
can we do better for you, right? And then they collect
Exactly.
data, try to convert you, make you stay, right? Retention rate very high this way. But yeah, I
Exactly.
think for a lot of our listeners that may not have run cross-border businesses or may not have run any kind of enterprise, they might find it very hard to understand this thing. Okay, so to give everybody a little bit of color, right? If you want to set up a business, especially a cross-border business, right? Your telephone lines, that means you want to draw like some landline, right? It's gonna cost thousands of dollars just for that landline alone, so that you can contact to the person next border, and then so everything is in sync. There are a lot of telephony systems in the past that will cost thousands of dollars upfront fee to set it up, and then continue for all these kind of essentially what you call legacy structures, right? With like recurring costs over time, which is why these guys are amazing, because they're going to do pay per use. That means you can play, they bring the barrier entry very, 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 very low. You can just kind of play around with it and see potentially if it can work for your business, right? Is that what I'm hearing?
Yes, that is exactly correct. And the exciting thing about Twilio is that they are not just going to be a communications company, and they are gradually going to move into end-to-end customer journey. Meaning, from the day the company onboard a customer to the subsequently you require servicing and all that, Twilio actually aims to help companies break down all the data silo, and they are doing this with their acquisition of Segment, I think about a year or two back. And last time when it comes to engaging customers, for example, on Decathlon or anything, from the day you make the sales to subsequently the customer look for you, ask about the product or complain about product, all these data are trapped in silos, like in little containers. And it's very hard to understand your consumer behavior when you're not able to draw a trend or tell a relationship between what they are doing on the website or when they're picking up the phone to talking to your customer representative. But what Twilio does is that they're really giving companies the edge that Amazon has. So for example, when you shop on Amazon, a big success of Amazon is how efficiently they crunch data. When you shop on Amazon, after you click on purchase an item, they're going to show you other customers at your age group also like this product. Would you consider this, for example? Or like previously when you selected this, you have been purchasing this for once a month, would you like to buy it again? It seems like you're going to run out of the product. And with this kind of data analytics, they are going to understand their customers a lot better. So really two-pronged strategy. One is they allow companies to understand their customers better. And then second, by offering the tools that's necessary to reach their customers in the most preferred way. Do the customers open up the email more or read or click from the links from the email better, or is it through SMSs? And right now, even when we look at SMS, so let's say you receive an SMS from UOB, OCBC, or DBS. We get it very often when it comes to advertising. You want to borrow money or not? Can't borrow money.
We got this new product, wealth management product.
Exactly. Borrow at 2%. Even though you click don't want advertisement, they will still send it to you, right? So like Twilio SMS, they are taking it to the next level. So like let's say you receive an SMS and you are curious about a product, refinance your mortgage at 1.5%, for example. A lot of times you have to pick up the phone, find the contact number, dial, call in. Twilio, you can just reply the SMS, boom, then they will funnel the SMS straight to a customer service a sales representative, and the sales representative will engage you immediately rather than you have to go through the hassle of reading more about the product or anything. Yeah, so Twilio really seeks to reduce friction, crunch data, increase revenue for the company.
So just now you talk about some numbers, right? $5 for like a free trial or something. Any idea what's the cost profile or some kind of margin which Twilio has to have per customer?
So when it comes to
request?
Twilio, right, their margins for all the telecommunications related, let's say it could be audio, it could be SMS. Typically, they make about 50% gross profit margins for this. It is considered low for a software company. But when it comes to understanding revenue, I think what is missed out often is not all revenue are created the same. Let me give you an extreme example. When you look at Costco, the margins is super low. They are famous for marking up the product by 10 to 15% only. So their gross profit margin is usually between 10 to 15%. But when you look at their company, it's super profitable. Why? Because they are able to turn their inventory super fast. working capital is negative, meaning they don't have to lock money up in store. Their customer pay them first and then they pay supplier later. There's no inventory lockdown. So this revenue, even though the margins are thinner, it's not exactly bad. We want as much of this revenue as possible. And when it comes to Twilio, it's the same thing. They're going to collect payment from the customer first before paying onwards to the telco, and they don't have to build, they don't have to dig all the tunnel and put all the wire and all that. So it's very capital efficient that way. And this kind of revenue or gross profit margin, even though a lot of people say it's low, but it doesn't consume much capital at all. If there's how much they can take, go and take as much as possible, and that is what brought their margins down in the recent quarter. Then there's the other aspect of the business, which is really the video, the live video, Facebook Messenger, WhatsApp, and you also have the email segment, which is powered by SendGrid. So all these command margins of between 70 to 80%. These are really the big margins because they don't have to give a portion of the revenue to the telco company. The mixed bag of reviews when it comes to what the market is saying for Twilio. But as I've mentioned earlier, even though the margins for the telco-related segment is 50%, but I'll take it any day because it doesn't lock up any capital at all.
Interesting. And actually, for this kind of business, right, they don't operate in a silo, right? So they're not dominant in the space. They're still growing, and I see them in a they are essentially a B2B provider. Okay, so it's a business solution. And it sounds like they're stuck in the middle, right? So there are a lot of guys that stuck in the middle, right? Like Square, when they first started, they're stuck in the middle. They operate with the small guy. Like Shopify, they operated with a small guy. And then, they kind of carve a market over time. Then, you want to see their solutions able to scale with the businesses or at least approach the bigger guys, right? And in the grand scheme of data management, I'm sure there are a lot of competitors in this space, right? From your very small people that are only operating on one platform, like on Facebook Shop, Carousel, or like just using Shopify directly, they have all the data that they need over there. Twilio feels like the guys in the middle, and then on the upper echelon, you have all your like Palantir or your other big enterprise softwares, right? So what are some competitors that you think are challenging, Twilio's position? Like, are they doing similar things, or do you think they can scale up to offer a wider suite as we go along?
So you're exactly right. Twilio started as a platform that targets all the middle-sized enterprises, but recently, or not exactly recently, 2 or 3 years back, they started to back really huge enterprise customers like Nike or Lululemon, for example. And they're all jumping onto Twilio because when we talk about the competitors like Nexmo, Bandwidth, or MessageBird, they are not able to provide as comprehensive a solution as Twilio.
Sorry, MessageBird called me. I'm drinking that MessageBird, walao. Yes.
Yeah, so when we think about the amount of functions that Twilio do, right, like SMS, voice, video, email, chat, and even fax, all these functions, the next closest competitor is only about 60% of the amount of functionalities they are able to provide when it comes to communicating to their customers. And I would say Twilio is not the cheapest solution. In fact, Twilio is the most expensive solution in the market, but yet they occupy the bulk of the market share. I can't really recall how much of the market share they occupy, but I think it's definitely more than 50% of the current market share. And the good thing is they are able to scale with their clients. As their client grow, they start to grow as well. I mean, even
rate? What is that? What's the churn?
Their churn is super low. I don't have the figure on my head, but it is the low single digits. And their dollar-based net expansion rate, which is it's over 130% for almost every single year for the past, I think it's more than 7 years or so. When we talk about this dollar-based expansion rate, right, it means like if it's 130%, it means the existing clients, let's say they are spending $100 a year, they are spending $130 the next year. And we see them pulling this land and expand strategy really well. Land and expand is very popular in SaaS. So like when companies enter into when they manage to sell to another company, they will start cross-selling different products. CrowdStrike, for example, they'll start selling different modules to other customers, and you really see the revenue per customer really start to grow, not just from price increases, from more usage, but also because from more products being used. And this is what Twilio is doing. Their recent acquisition of SendGrid. Yeah, SendGrid is the number one email platform when it comes to the SaaS company. And after Twilio acquired it in the most recent quarter, their growth actually started to accelerate because the growth rate started to accelerate from 31% to 36% because Twilio started to cross-sell their existing customer this email communication as a service, SendGrid to their existing pool of customers.
But what makes them so sticky? What makes what makes Twilio so sticky? They are one of the most expensive, but is it because they have a very good customer service or they are very reliable? That's why people stick with them. Like, why aren't people just switching out? Like maybe after 2 years or so.
Yeah, so that's a good question. So while they are the most expensive amongst the competitors, I think a good way to think about it is, when there's a good company which I can't think of it now, but they provide nuts and bolts to Boeing and Airbus. It is going to be a very small fraction of cost when it comes to building a plane. Nuts and bolts is going to be very small, but it is extremely critical. So same thing for communication services. While it is most expensive, it is about less than 0.02 cents per message, for example. It is small when compared to the other costs, but it is mission critical. Like when you are communicating with your customers during this period, during COVID lockdown, digital communication suddenly becomes super important because you're not able to do the normal marketing, like putting a poster or making your stores enticing for your customers to enter, or getting your salesperson to start talking to your customers. And that's where consumer engagement becomes so important, and you want it to be super reliable, and their reliable is number one when it comes to this space.
Yeah. So that's all the rosy, like they're doing very well, customer product retention, churn rate very good, potentially can keep growing, right? But then there's always this classic problem, in all SaaS business. Dropbox was the first guy that did whatever that they did, and then it looks like, there's a business here, huh? We're gonna double down. Then all the big guys come in, right? Zendesk was one of the only guys in the whole like customer call center ecosystem. Like your Grab, a lot of people are still using Zendesk backend, right, to do all the chat and all those things. What? And then after that, Freshdesk came about, powered by Google. Google support them, right? So what is stopping all these big guys? Are you seeing big competition coming in? How can they continue to thrive in this space?
There's definitely competition coming in. Amazon is rolling out something similar, but
Amazon always
Amazon
is Amazon
everywhere.
Everything
Really
yes.
everything store. Everything also want to
Spoiler.
do.
Yeah.
Yeah.
There's a discussion. There's a term in the investing space that like once Amazon pull out, right, you should like breathe. like wow, Amazon out of this space. Thank you, right?
But you can see a lot of these big boys, like when they try and go into this space, they don't do it as well. And I like the CEO of Twilio very much. He's super candid. So candid is one of the things I look for in management also. It's quite unbelievable, but he starts the annual letter. People is super formal with the annual letter. He starts with "Dear Twilio's Tong holders." It's not like "Dear shareholder." He jokes a lot in his shareholders, and it really shows like he write the shareholder letter himself. He didn't outsource that function to other people, and he rolls out innovations super fast. Like every single quarter, there's new things coming out because they are always listening to their clients. When they are doing these communication services, he always say like, I listen to the.
I'm not expecting the communication guy to not communicate with their customers. Right? That's like baseline. You sell communication service, you better communicate with your customers.
Exactly. They always see a lot of pain points, and a lot of their customers, they take their customer feedback super seriously. So when their customers were saying like, it's great that you provide the API for texting and for calling, but we don't even want to build the contact center ourselves. Can you find something that that is easily customizable? And and just within months he came up with Twilio Flex. So the pace of innovation is super fast there. But I think you're exactly right. When it comes to software companies, it is a rapidly changing industry, which is why valuation risk is always something that is at the back of my mind, because all these companies are definitely not cheap. When you are trading at price to sales of 30 times, any form of lagging or disruption, it's going to send the share price to rock bottom, because so much of the value is tied up in the future, and it is a space that you constantly have to track. So there are a few companies that you don't have to track so much, like Hermes or LVMH. Every year they just raise prices. Ferrari every year just raise prices, don't produce too much, easy. But for companies like Twilio, CrowdStrike, you have to be updated with the companies and the industry movement to look out for any sort of these changes.
Yeah, for sure. And there's a lot going on in this industry, from like security of SMS and all those things. There'll be endless discussion. We cannot finish everything today, right? But generally, I think we all get the idea that Twilio is essentially, they're in a relatively neat size at where they are. They are not new. They're not figuring out a market, but we're trying to see if they can continue to stick with their customers. And for a lot of enterprise customers, you need to be able to scale with me. So if I use you,
Right.
then I need you to continuously grow with me, and you need to prove the concept that you can have me. So which is why having big adopters like Nike, like Lululemon, they all kind of help, right? But once again, these guys may not be the fastest growing company, so they're very dominant in the space they're already at. So we want to see if they can continue to scale with other SaaS companies, but we can continue this discussion as we go along, right? So I think that's a lot of good stuff there. Any one of you, if you have more questions, please drop in the comments. We'll bring it out. And yes, I think that sums up Twilio. Yeah, we talked damn long. Yeah, I think we got a lot.
Super
I think we can do 3-hour segment. Okay, next time we do turbo 3-hour segment. Okay, but yes. There's this one other company that we're supposed to talk about today, which actually Elvin has already talked about it last Monday, right? And it's a now famous, or now within the media circuit, extremely a lot in the media circuit, Alibaba, right? And we talked about the whole cloud infrastructure. Why is Alibaba strong? The evaluations today. What is the Chinese future? But what is your take on Alibaba? Aside from some of these things, why do you think Alibaba is something worth talking about?
Yeah, so I monitor the 13F filing regularly, and for the readers who not familiar with what 13F is, basically those super fund managers of, I think, above 100 million or so, they must disclose their position every 3 months. So there are 4 very notable high-performing investors who invested into Alibaba. So the first one is Charlie Munger. Second one,
I know him.
You know him, right?
Yeah, I know. Yeah, he's not my friend yet, but I know him. Yeah. One day he will come on. Yes. Yeah. Continue.
The next one is Monish Pabrai. Then there's also Tom Russo, and the last one is Acre Capital, which was previously run by Chuck Acre. So all 4 of them beat markets by a huge margin for a very, very prolonged period. So I mean, all of them took quite a sizable position in Alibaba. I track them quite often. The position they started wasn't a starter position, but that is to say there are still risks behind the company, of course, because they are Chinese company, highly regulated by the government. But the story behind Alibaba is really their e-commerce and their cloud business. The bear thesis around their e-commerce business is companies like Pinduoduo, they're really eating up a lot of market share. But same thing when it comes to Facebook and Google. A lot of people will come in and take market share, but still their revenue is rising every single year. While they are not the clear, there's going to be losers from this, and the losers is going to be the traditional players. For Facebook and Google, it's going to be the traditional media. For Alibaba and Pinduoduo, the losers is going to be the hard retail store. They are just taking a lot of market share from them, even though the market share is not as dominant as once was. I think at one point it was 80%, then now it dwindled to maybe 70% or so, close to 70% market share of e-commerce only, because Pinduoduo really expanded really very fast. But when you look at the amount of gross merchandise volume they delivered, it's still rising every single year. It's not decreasing at all, and every 11/11 they are making new records. It's amazing.
They're the only guys that can make a shopping festival and then keep reaping their shopping festival. It's pretty
almost
nuts.
like a holiday, right?
Yeah, it's like a holiday. Man, when I was staying in China, right, the 11.11 is really a thing. It's amazing, and is their like supply chain infrastructure is so powerful that even on 11.11, the next day or 2 days later, I will get my product already, and that was like 3 years ago.
Wow,
You know, you
this
can
is
think
amazing.
about where it is today, right? So, but they are not alone in this space, right? With JD.com, with like Pinduoduo, you know, but Pinduoduo is going through the same problem that Alibaba had in the beginning, which is product quality control.
Exactly.
Very chalat, you know. Pinduoduo has very bad review, and I think JD is probably a bigger competitor, you know, in this like digital commerce space with Alibaba. But then the question is this is this like a monopoly, you know, which maybe not, maybe it's a duopoly, maybe it's an oligopoly kind of situation, multiple big commerce sites, maybe not one guy dominating the whole situation. You never know, right? But that will form the base case of what's going to happen. But I want to hear a little bit of your thoughts on smart retail. Right, so Alibaba is trying to go into smart retail from Hema Chaoshi, a lot of other things that they're trying to do. It accounts for 23. The last I saw, about 23% of their overall revenue in core commerce. Right, so what are we seeing there with smart retail? Because they don't talk as much about it compared to their other competitors. So I want to hear your thoughts on that.
Yeah, I think when it comes to e-commerce in China, it's slightly different from how commerce works in other countries. So, what the key to a lot of their success is you have to own the customer, meaning like you want to come up with so many different product offerings, such that your consumer always want to go onto your platform. So like you see Meituan implementing this strategy also. They started as food delivery, then hotel booking, then suddenly everything, really everything start to come out. Because when it's only one function, it's very unlikely the Chinese consumer want to install your app onto their phone. You must offer really a ton of things.
Then that's
And
the discussion with suppliers. Okay, that's the interesting part, which is, you know, like every single app in China, whether is it
yeah,
Alibaba or whether is it WeChat or whether is it Meituan, they're all selling all sorts of things, right? They're cross-selling all these things. They're super apps, right? And they're selling travel. Let's say travel is a sub-segment of their product, but actually all the travel is under C-Trip. So C-Trip owns
exactly.
the whole supply chain. Okay, so that one we can have another discussion another day. Right? But this is the idea behind a lot of their cross-selling environment in China. But we really got to see who owns the supply chain. I think that's a extremely under discussed point of view.
Right. Yeah,
Mm.
and when it comes to Alibaba, they really try to be part of every single thing. Like they have the Netflix equivalent, they have the YouTube equivalent, they have the e-commerce arm, they have food delivery, Ele.me. They really have everything, and really this is to harvest a lot of the data from their app users. You imagine like when it comes to selling products on Amazon, for example, and let's say your daughter likes to watch Disney Frozen. She watched it on Disney Plus. Amazon is not going to get that kind of data, but if she were to watch it on the next Netflix equivalent of China, she's going to be captured by Alibaba, and Alibaba is able to send super targeted advertisement to your daughter or to your family when it comes to pushing out this kind of product, which is why you see Alibaba really tries to push out them a lot of functions, even though not a lot of them are super profitable, but it's important when it comes to a data point of view and owning the user. Yeah, and I think Alvin covered this also, which is really their cloud platform. Going to start turning a profit this year, and not Alibaba, China is super nascent when it comes to cloud. And I don't think the government will want to destroy this. They are 3 times the size of their next competitor, Tencent, when it comes to cloud. Because when it comes to enabling the IT infrastructure, cloud is super important in enabling all these different tech companies to flourish. That's where all the innovation comes in. And we see a lot of these SaaS company coming out after AWS launch because they bring down the amount of price that's needed for companies to start a business. It's no longer you have to spend a ton of money building up a data center, then you see whether you can scale from there. Initial cost is not expensive. And I really think the government would not want to shoot themselves in the foot because taking out a key cloud player is going to be extremely costly.
Mm. Can I hear a little bit of comment about their manpower? Okay, so interestingly, they have all these features, there are all these things that they're trying to build, right? And everybody talks about their business, everybody talks about, what are they building, where are they, but if you just look at why Shopee is winning Lazada, right? Shopee is paying top dollar in
Right.
Indonesia, hiring all the best people, the talent acquisition and the talent management process is amazing as to what they're doing compared to what
Right.
Lazada is doing within this region, right? So Alibaba has a very, very unique Alibaba campus. Right, so the way they run their whole thing is like a uni town altogether, and everybody has pseudo names inside. You can be Yang Guo, you can be Xiao Long Lu, but okay, probably Yang Guo and Xiao Long Lu is a bit taken, but
Right.
you can do all sorts of weird names. It's an extension of Jack Ma. Like, essentially, this Xiao Kia, he set up this whole company, and then he has this whole campus. Everybody lives there, and they innovate there,
Right.
they talk there. Does that add to how you see the company? Because fundamentally in the tech space, if you want to keep innovating, you gotta have the best people. 不可以骗自己 on that, right? So
Right.
Is that important to you? Do you think that's an advantage compared to all the business that everybody is looking at?
Yeah, when it comes to the tech business, attracting talent is definitely the most important thing. It's almost like the company that can attract the most talented developers that are going to win the game at the end. And it's a good point you raise up Lazada and Shopee, because the whole reason why Lazada is losing, and it's one point I don't really like a lot about Alibaba, is that they have a super top-down approach. And you look at the company's employee happiness level, there are some disgruntled and quite a fair number of disgruntled employees because of the 996 working culture, and Jack Ma is quite supportive of 996. For readers who are not familiar with 996, is you work from 9 a.m. until 9 p.m. 6 days a week. So, and when it comes to Lazada, they are not very strong in the international arena. They are really losing out a huge market share to Shopee, because Lazada has quite a top-down approach, and you see a lot of their top executives, if you stalk them on LinkedIn, they are all leaving, and a lot of them are leaving to Shopee. Because when you need to get something as simple as change the platform color, you have to fly to Hangzhou, get permission, then you fly back. For tech companies, by the time you do that, so slow, you are going to lose out a huge chunk. And employees are not entirely motivated. Like when Lazada wasn't doing very well, they just parachute someone from the headquarters to come in and take over everything. And a lot of times, you see a lot of the employees being disgruntled. When you look at what's the platform that tracks employees' comments, Glassdoor. When you see Glassdoor, I see some comments like, what do they expect? The management sent us instruction to Singapore in Chinese. How are we supposed to understand? That kind of thing. So very top-down approach, which I don't really like. But still, at today's valuation-wise, and we cannot underestimate their strength in China. I think in China they are still a very dominant presence, and they are still able to attract a large amount of talent. But I'm not putting a lot of hope in their international business. Lazada, for example, I think their strength lies in China, and that's where it's going to be. When it comes to the Southeast Asia region, for example, I really see Limited taking market share like every single place. Yeah, it's really amazing what they're doing.
But Lazada, as compared to the overall revenues for Alibaba, right, it's actually quite small, isn't it?
It's very small.
Yeah. Unless you're talking in just the Southeast Asian region, I think that's a totally different discussion. Yeah. But how about Alibaba's their foray right into India? So just now under Facebook, you mentioned the payments part or the banking part of India, for example, it's underserved. So Alibaba actually went into India via Paytm. Right, they made quite a sizable investment into that. But do you know any kind of ongoing developments there, or are they just letting things run the show? Or are they very top down into Paytm also?
Okay, when it comes to India, they don't like China. So I think a year or two back, the China government actually banned all India players from entering into India. So I don't really see Alibaba being able to make a lot of movement, a lot of inroad there. if anything, I think C Limited might be making their next move there, because you see them launching the game. I think it's called Free Fire, if I'm not wrong. Yeah, so it just launched into India and it's gaining huge traction. And you know, C Limited, that's how they work, right? They will send the game in first to understand the consumer. Then after that, they'll start sending Shopee in really. Yeah, so because of government regulations, the hostile relationship between India and China, I don't really see Alibaba gaining a foothold in India.
Fair point. Yes, but then I think India is also a very big discussion. We cannot complete it today, right? India has a very questionable infrastructure ecosystem. Whether or not the whole big e-commerce kind of way of doing business can really work in India is a big question mark. Right? It may work in small little parts of the big cities that are very developed, but to extend all the way to what China is doing, or like what Alibaba and JD, Pinduoduo, and all these other guys in China is doing, may take 20, 10, 20, 30 years, right? So that's a whole different discussion that we can have another day. Okay, so that's great. A lot of good juices, a lot of good comments. Just want to give a last shout out. Last 3 seconds or last 5 seconds. You have any question, you better write in the comment section now. Okay, if not, then that pretty much sums up what we have today. We already extend very long. So yeah, for our listeners, I think we will continue to have a lot more discussion as we come along. Thanks for joining us, Thomas, today. Do you have any other last things you want to share with our listeners before we end this?
I write at steadycompounding.com. So like a lot of these companies like Bilibili or any not just in US but also in China, like I do break them down from time to time and I share about investing concepts. So if you're interested in following, just head down to steadycompounding.com.
Nice. steadycompounding.com. So thank you for spending time with us. Stay tuned tomorrow for more good content. And if you want to hang out with us, join our Telegram group. Okay. And you also can be a member and then we can continue to have a lot more discussion with premium investment content. Yeah. So everything, just go to thefinancialcoconut.com to check things out and we will leave you here today. And if you want to, get your 20 free Twitter shares, promotion ends 31st May. Faster sign up for Mumu and refer your friends. Then you will get that promotion. Okay. So thank you. Thanks for spending time. We'll see you guys tomorrow. Woo!